Hello everybody, welcome back to Financial Trading Basics Part 20, Industry. Talked about macroeconomics or just larger scale trends of the economy last episode. A couple leftover thoughts from there. Keep talking about how I think some specific industries will be changing, such as like video games. Talk about NFTs again, we'll talk about SPACs again. Start with some economics and then we'll talk about trading them. Again, covering our motivations. So the first thing I want to talk about for the industry episode is just when you go look at the market and people say, cyclicals, industrials, utilities. I don't see those as tradable correlations whatsoever, because of the breadth of the market, because of the amount of players, because of the liquidity of the market. But fundamental innovation versus application of technology at the society level, right? You have GM produces motors, you have Tesla that produces electric cars, but you have an engine, right? The engine is the fundamental innovation over the 50, 100, 5,000 years versus the application of technology. So, and I just have index versus company. Like I said, I always trade a company. To me, indexing things, the S&P 500, the Russell 2000, the NASDAQ, to me that's just stationary commentary, right? The S&P is up this amount. For trading, for even economic reflection, means to me personally literally nothing. But right, we talked about how big can a company get, just using specifically Apple because it's the largest market cap stock that exists right now. How much can that grow? And asking that question again, don't have great analysis. But my overall point is that I don't think, because of where we're at with our population and technological development, I think there's a genuine no limit to how big even Apple could get, or the Facebook FANG, anything like that, in terms of sheer numbers, dollar figures. But because of fundamental innovation, like I said, you have to do something new, and then the acceptance of the consumer, the sentiment of the consumer, right? Like Facebook, there's not going to be another Facebook in terms of, whatever Facebook does specifically, but the adoption was so rapid, right? That's the fundamental innovation. Then you have, Pinterest or Instagram or just other applications of the same type of sentiment. But my point is, at the species levels, the problem gets solved one time only. It absolutely gets iterated. The technology gets better. There's more generations, but there's one innovation that spurs an industry. The different companies you get are the applications of technology and the different ways, nuances to apply the innovation. The future time frames, and even for trading, on my point there is I think the innovation of Apple will limit its growth or market cap, not its ability to grow against the rest of the market. And with that being said, I still don't have a great functional understanding of how big a company can get, even in our environment right now today. But the future and time frames of city states, countries up to 100 years or 1,000 years or 10,000 years. City states are not going anywhere, and I think that's a good thing. Like I said, for consumer behavior, I think as the sentiment of the species increases, culture increases, the desire to learn about history increases, the desire to build arts and skills, to build companies. I think that's very poignant to a strong family life, to strong individuals, and to strong, again, I don't like nationalism or patriotism to any extent, certainly not in our current environment. But that will genuinely increase. The strength of every country and all of their exports, all of their individual contributions to GDP. But I do know, here I can give you an absolute definitive statement about the long-term future of economics. Real estate in about 2 billion years will be worth literally $0 because the earth will be swallowed up. So, right, just thinking on a random super long time frame, obviously 2 billion years, no one's going to go make a trade based off that. But, right, you can still have companies that were started, let's say we go to Mars or we go to another planet, And, in 2 billion years, we'll either be extinct or we'll have had to. But, how will, from 100,000 years to 2 billion years, will there still be companies associated with given city-states? I think so. Because I don't think globalization in terms of like throwing away all culture, like literally ever, very long time frames, 100,000 years, billion years, blah, blah, blah. Consumer behavior, like I said, that's just a random, that is definitive though. If the earth goes away, the real estate of earth will not be worth anything. Consumer behavior, let's talk about needs versus wants and sentiment of an individual. The first thing I just want to talk about is investment bias and the use of a purchase. Right, you buy something and you don't use it, you feel kind of shitty about it. You buy something, you use it enough times or given use, you don't give a shit about it at all. So that's where, on an individual basis, that is where the sentiment of the species starts, and it's just collective past that. But as technology and industry benefits everybody, universal basic income to me is economically inevitable, strictly because of the inefficiency currently available in the marketplace. But with that being said, again, if you can't go make, again, a decent income, a couple $1,000,000, you are a lazy fuck with no skills, period, end of story. The work week will shorten as a function of industry, right? We all love to create jobs. We just created fucking 10,000 jobs, and we're all sitting around in the office drinking some coffee. So what the fuck do we do? Right? There's physical limitations. There will be physical, as the consolidation of industry happens, they're just not, you don't like, work hard, that's trailing sentiment from hundreds of years of the Industrial Revolution. But if everyone gets their food, their shelter, has ability to grow or make money, and industry functions, nobody fucking wants a job. I want to create less jobs. Let's take all the jobs away and make everyone rich. That's a way better outcome. And that will happen as a function of industry. Even short term, 1 year to 25, 50 years, and then inevitably hundreds of years. Last thing, just the maturity of the individuals will increase, the consolidation of sentiment. Talked about that a lot in the last episode. And now we'll just go through some trades, and again, SPACs, NFTs, some more terminology, and we'll just keep rolling. Just before we get to talking trading, just a leftover thought from the last clip. Need limits spending on want. Right, we're talking about as industry provides universal basic income or people become less poor. Right, the psychology, personal, individual psychology of not spending any money is such a real thing when you're poor, you're not even comfortable with your own bills, which obviously has a negative effect on consumer behavior overall. So as sentiment increases, the overall needs of the species will decrease substantially in the near term. All right, and now so let's just talk about different industries and investment vehicles. Industries I like with the things we're talking about. Video games is one industry that's seriously interesting to me. Just as is, I think the demand is guaranteed to increase because video games to me are a very good learning supplement tool. I would even say the best supplement tool. Just as an example, I play NHL 21 all of the time. I've never played hockey before. I can barely ice skate. But when I go play the video game, I can learn like physics scales. So you can learn the momentum and learn the movements of a hockey player. And then I go watch a hockey game, and you can see the movements a lot clearer. You can see what they're doing or how they're setting up, loading to shoot the shot, or whatever they're doing. So, and I've talked about Assassin's Creed in one of the other lecture series. But to me, all things considered, short-term, medium-term trade, 1 year, 18 months, 5, 10, 25 years, I think there'll be very, very, very good developments in video games. Correspondingly to NFTs, I think that's just as is for video games. I think we've talked about NFTs, but I think they will integrate with the video game industry tremendously. I also think NFTs will have just good use cases by themselves, just for art. Like I think Beeple was the artist. But right, if you have the rights to a digital thing that's seen on the internet, But how about if you just build the industry of like a virtual, not an in-person museum, but somehow again you project the virtual art through crystals or something. So I think you could have a very good physical application of just some sort of revamping the museum experience for a consumer with NFTs. For getting that application, I think it'll have an application with video games and time investment. Or when I'm playing NHL, I like to get new clothes, virtual clothes on there. So it's whatever people are spending their time doing. They just want to have some sort of gradation, some sort of rank, like, again, a video game or just like a leaderboard. Like, people like to compete, and so whatever you spend your time investment on has value. And I see this overall going up tremendously. Earlier I said I see NFTs as bigger than Bitcoin or bigger than cryptocurrency. I don't think that is true, just because currency is a much bigger market. But I think an NFT-driven company or industry is at the absolute beginning. How many are being issued or bought and sold in the past 6 months, completely irrelevant to the instrument as a whole. SPACs to me are not anything unique. They're not an industry. They're not, a novel financial thing. It's literally, to me, it's literally just cash with a ticker that might acquire a company and go public. So for trading, there's absolutely nothing unique to me. I don't think they're good or bad. I think it's just individual. Industries I don't know about. Like I said, I'm very confident on video games, confident on NFTs. Certainly confident in general that anything people put their time to is valuable. But how about electric vehicles versus petrol vehicles, or just gas or natural gas? I don't know. I could see electric vehicles being definitively better than gas for the environment, for maintenance, cost to the consumer, just filling up, getting your oil change, stuff like that. But as a technologist, I'm certain filtration technology will exist, right? We talk about the rhythm of the gym analogy of, piecing together the nucleus, but there will certainly be a generalized filtration. As just a citizen, I'm certainly for limiting carbon emissions as much as possible. Don't bet against that, right? That's the reckless mentality. I'm certain on the technology, so we don't need to worry about the carbon emissions. No, but I could see that, taking 25 years or 50 years or 100 years. Electric cars were around 100 years ago. So, this is even like a new comparison of industry. And like I said, I don't know. I don't know if you said, Brad, tell me why electric would dominate. I'd say, well, filtration technology will certainly exist. Tell me why petrol, even if filtration exists, will people want electric cars? I still think so. So I get no real direction there. Healthcare, we've talked about that in this. Diagnostic doctor-patient sentiment will certainly change. How much so? No real idea. But I do think that will go down in terms of the idealized doctor. I think that already has, but I think it will continue to play out. How does that affect a trade? Does it affect the profitability of a hospital? I don't know. Obviously less people paying stuff will decrease the revenues, but... And then for pivoting, I'll do another episode on mergers and acquisitions, hopefully when I'm operating or acquiring something, just in terms of the motivations and the trade motivations for mergers and acquisitions. I'm out of my water there. So those are just, again, two industries I don't know what's going to happen with. And plenty of other ones. Those are just the ones I picked. And now we'll finish up with some terms, and then we'll go through the Charlie Munger and Warren Buffett breathtaking economic insights in their shareholder meeting. Heard the fundamental theorem of knowledge a lot. Inflation. I'll pass on Bitcoin. Unemployment numbers. Industry. That's what I got out of the Charlie Munger, Warren Buffett conversation. I'll just go through their actual comments, and not even just as Warren Buffett knows economy. No, you don't, Warren. You fucking old fuck. No, you don't. But it's demonstrable. So for the terms, right now today we said inflation is runaway of a given currency against other currencies. You can literally translate this directly economically. Anytime anyone says inflation on CNBC talking about money printing or overall decrease of dollar power, they're talking about dilution, right? In chemistry, anything that gets less poignant is diluted. If the Fed prints a bunch of money and my dollar's worth less, it's diluted. If the general price increase purchase power over 10 years goes less, it's diluted. So every time you say inflation, you're economically thinking dilution. Earnings is profit. Profit is never gross, right? Gross domestic profit, gross profit versus net profit. Net profit is the only profit. Profit margin. Margin is leverage. Margin is debt. Profit is return. Profit is income. Margin, this is word salad. Margin is to debt. Price to earnings ratio. Talking about industry and standard trading, you'll hear P to E ratio. 20 companies exist in the lumber field. All of them are trading at 17 times forward earnings. The company trading at 11 times forward earnings, they'll say is a value stock or is undervalued. To me personally, P means nothing. An individual, I've never looked at that, never cared. Again, just because overall market participation, we've already talked about describing, classifying industries as a meaningful way to talk trading is nothing to me. 6, crash, rally, surge, blowout, just 4 random terms. My point is word association to price action movements. We've proven that these words come from physical movements or physical changes. So I don't know the right associations. I'm certain there are correct associations. So again, I just don't know them. But just like anything that sounds like crash, rally, surge, blowout, falling off a cliff, going to the moon, those will certainly pair to physical processes. Again, I just don't know. I just wanted to talk about that briefly. And then I also wanted to reflect, and just look at this monstrous word salad that has proliferated through our society. Once again, EBITDA. I think I even missed debt before. Earnings before interest, taxes, debt, and amortization. So we have earnings, that's a thing. Before, we have a preposition. That's cool. I don't know how the fuck this shit got in here. But before, interest. So interest sounds like, again, kind of like taxes, but interest in here is like a pay down, a negative thing. But interest is more, right, if my stock appreciates, it's gotten more interest, so flips the context with interest. We go back to taxes, and now we're at debt. So debt is kind of like interest, we just switched it real quick. And now we're back at amortization, which is absolutely a function of taxation. Well, not of taxation, but of debt. So it's like, this is honestly one of the most inspiring pieces of word salad that I've ever fucking encountered. EBITDA. Wow. Let's talk about the Berkshire Hathaway, just enlightening conversation. Mr. Buffett, the Oracle of Omaha. It's time you get formally introduced to the Orifice Oracle. Whether it's economy, whether it's speaking, whether it's not speaking. I am the Orifice Oracle. You can extend that logic to all of the orifices. But going through the conversation, Warren says there's nothing illegal about it, talking about Robinhood or, just Robinhood's commission-free trading has co-option. There's nothing illegal about it, there's nothing immoral, but I don't think you build a society around people doing it. So here we have the most accomplished investor talking about a brokerage affecting the building of a society, industry, sentiment, environment, sentiment, industry, company, exchange. Exchange is going to affect demand and sentiment. No. Moving on. If a group of us landed on a desert island, knew we would never be rescued, and I was one of the group and said, I'll set up an exchange over here and I'll trade our corn futures and everything around it. I think the degree to which a very rich society can reward people who know how to take advantage, essentially, of the gambling instincts of not only the American public, the worldwide public, it's not the most admirable part of the accomplishment. What the fuck does this mean? Gambling instincts? So you're saying you can take advantage of people in the industry sense directly today? No. Just no. Again, this isn't even a coherent economic thought. Let's just move on. While reiterating his thesis that American corporations are a wonderful place for people to save and put their money. And he added that they also make terrific gambling chips. Just forgetting Warren Buffett and Charlie Munger for a second, do I think taking a 1 week out of the money call option or gambling is better? 1 week out of the money call option, and I'm fully for gambling, fully for, if you want to do dumb shit in the market, do dumb shit in the market. It is not going to affect fucking anything. You might hit big and make the money. If you're risking money that you can tolerate, do it. But like, as affecting the market, or again, one exchange, or the demand of people, not even a coherent thing. And if you can cater to those gambling chips when you have people have money in their pocket for the first time, and you tell them make 30 or 40 or 50 trades a day, and you're not charging commission, but you're selling their order flow or whatever, I hope we don't have more of it. And I'll be interested in reading the prospectus. Warren Buffett's comments didn't really neither of them bothered me, but like the lack of economic understanding and thought in this was just hilarious. But do I think from the consumer, from Robinhood, is that like a bad thing? Fuck no. Like literally 0% fuck no. Right? And you can go watch, I don't know, Schwab will say it'll increase. Right now their advertising claim is like, we can increase your price by on 93% of the orders. Cool. So I'm going to, instead of buying, 53.176 pennies, because the market makers can see that, I'm going to make, 0.3 of a penny less over 10 grand. So like $3, $30, not $30, like $3, 3 cents. I mean, $0. So is Schwab or TD Ameritrade or any brokerages versus Robinhood some sort of meaningful distinction? Literally no. Morality of selling order flows? No. Moving on to the more fun stuff. Munger took a stronger stance against Robinhood, calling it god-awful that something like that would draw investment from civilized men and decent citizens. It's deeply wrong. We don't want to make our money selling things that are bad for people. So again, I'm not even sure how this responds or even continues or talks about what Warren was saying. Is it deeply wrong? Fuck no. Again, that's not even economically consequential. Past that, let me do a little quick experiment. I'm looking around. Where the fuck are the values in the American fucking society? Where are they at? Can't see them. 27 and a half years old. I've never seen one fucking value in this entire fucking country. So it's deeply wrong. What's deeply wrong? Participating in the market, trading. Old dudes, their investment bias. Oh, I missed some Bitcoin. Well, this is more about Robinhood. But he also talked about Bitcoiners, cryptocurrency being bad. And again, as like money laundering, cash is the most. I can show you how to track Bitcoin. The FBI can certainly track the Bitcoins. You can't track fucking cash dollars. So, again, fundamentally incorrect. Don't care about the comments. But these are these orifice of Oracle. Billions of dollars. You make decent investment decisions. Worlds of difference of understanding the economy. I mean, these aren't even coherent economic thoughts. It's deeply wrong. We don't want to make money. I know, but that's bad too. Talking about lotteries, no. Gambling, absolutely fuck not. There's so much inefficiency in the market. $1 billion, $1 trillion here or there really doesn't fucking matter, literally fucking at all. So the $80 billion of retail trades, or whatever the number is, 0% consequential. They said they're taxing hope. That's very bad. That's one of the things that's wrong with it. It's getting respectable people to do these things. These states are just as bad as Robinhood. I think that was talking about, again, gambling or lotteries in different states. I don't have the Bitcoin comments or the cryptocurrency comments, but there you have it. The Oracle of Omaha versus the Orifice Oracle. Who would you rather listen to? Thanks for watching Financial Trading Basics Part 20, Industry.